Thanks for joining us. I'm Marlon Bowling with you, and we just got some brand new information. It's our ethanol production numbers for this week. Well, did it improve or did it decline? Let's take a look at what we had. Well, it actually went up a little bit to 1.01 million barrels per day. Last week it was 994,000, if you recall. So we picked up a little bit in the production pace. The 4-week average now at 1.002 million barrels per day. The fly in the ointment is the stocks increased again by about 700,000 barrels to 25.5 million barrels, and the imports remained at zero. Now, as we look at our grain trade, everything firming up today, that's for sure. Let's go to the corn board. Our quotes are from bar chart. We have March corn 7 3/4 higher at 6.45 3/4, and December is up 4.5 cents right now. Over on the soybean side, we had that sale overnight. That seemed to really help grease the skids, as they say. We have the March soybeans 27.5 higher, now 15.79, now 27 3/4 higher on the day. Your new crop November contract on the soybeans, well, it's currently quoted at 14.49, and that is up 17 cents on the day. Now, checking in on the wheat, it had been under pressure, but we have Chicago March wheat now 2 higher at 7.81 3/4 in the Kansas City market. It also has turned around. March is now up 1.25 this morning. It's at 8.07 1/4. Meanwhile, March spring wheat now 2 lower at 9.51. Todd Bubba Horwitz joins us now. He's with BubbaTrading.com in Chicago, and another day of a turnaround type trade here. Todd, you said that you were kind of bullish on the grains. Is there going to be more of this ahead?
Yeah, Marlon, I'm very bullish. Here's my concerns now, which actually lead to potentially more bullishness. Is you're watching the price of crude oil is exploding once again. The play is going to be a killer, and with higher interest rates because they won't shale or frack again, so it's going to have to be higher interest rates to slow this inflation. It's going to put real pressure on the farming community because their interest rates are going higher, and they already pay higher rates to begin with. But overall, these prices are going to go. These prices have a chance to go dramatically higher, and certainly a 17 handle in the beans, and a 7 handle in corn, and a 9-10 handle in wheat would be no surprise. And a lot of this has to do with the actual input cost and what's going on here. And I think obviously with the weather and everything else going on, so there's a lot of things that could lead to significantly higher prices.
So how do you handle pricing of old crop as we move forward? I mean, do you reward the market every so often with incremental sales, or what kind of approach do you take?
Well, I would hedge the old crop and look for higher prices, knowing that I can lock in where I can probably sell it right now. So, I mean, if you need the capital, then you need to sell, right? If you got to make notes, you got to make bills, you got to sell some, and certainly nothing wrong with that. But if you're not under duress, then hedging it makes a lot more sense, because if I'm right, we're going a lot higher, and if I'm wrong, you'll be hedged and protected at the price you're locking it now without selling it future, but leaving the whites, the top side open for in case there is a major fear panic in these grain markets, which, again, we have a lot of things that could go wrong here, including you might have a shortage of crop next year because some guys might not be able to plant. So this has have all the makings of some real ugliness from that side of the coin.
Going to be a year of incredible risk, that's for sure. A lot at stake. Well, thank you, Todd, for the comments. Todd Bubba Horwitz of BubbaTrading.com. He's in Chicago. We'll be back in a moment and talk livestock after this.